Is your practice tired of wrestling with insurance denials, deciphering EOBs, and watching your revenue slip through the cracks? You are not alone. Welcome to The Claim Game, the podcast designed to cut through the confusion and provide you with the best practices for revenue cycle management success. We are Jeremy and Catherine Zug, and we've been with people just like you in the trenches. Each week, we'll break down complex billing processes, share real-world solutions from practices like yours, and ask questions of the game makers and changers of healthcare so you can take control of your revenue. Let's turn those claim denials into deposits and help you return to focusing on patient care. It's time to win the claim game.
Hey, welcome back to The Claim Game. I'm your host, Jeremy Zug. Today is a solo deep dive into the RCM category that everyone fears and is probably the simplest to fix, and that is claim rejections. If you're running a private practice, you've likely realized there's a strange mixture of things going on. On one hand, you're a clinician. On the other hand, you deal with hyper tangibles, right? Overhead, payroll, and the increasingly complex world of insurance. The struggle isn't that you aren't good at business. It's that we're trying to apply the wrong orientation to billing problems. In a session, wait and see can be a tool, but in billing, wait and see is a slow motion train wreck. So today we're going to bridge the difference between success and failure for rejections. Our next episode is going to be a practice audit episode with Shannon Heiser in Missouri. We cannot wait for that episode. It's going to be really good. But before we get there, let's take a look at the world of claim rejections. And we're also going to talk about the do-it-yourself rejection resolution guide that we have in the Hourglass. So let's get started. And we're going to start with a particularly hard truth. Rejection is an unsettling word. Nobody wants rejection. Nobody needs rejection, I suppose. And it carries a lot of weight in our culture. In the billing office, though, for your private practice or your agency, rejection in terms of claims is just a data point. It's not personal. It's not emotional. It's just a technical status. Maintaining a calm, level head here, especially if you're doing your own billing and you see rejections pile up, you got to stay calm. You have to manage yourself, and that's really your biggest asset. There's a strict semantic difference here that we've talked about in previous episodes. But if you haven't seen those episodes, I want to hit on that semantic difference again. And it's the difference between a rejected claim and a denied claim. A rejection is something of a soft failure. It means the claim was submitted. You hit the submit button in your EHR, but it never arrived at the insurance company. Your clearinghouse acted as a scrubber in a sense and found an error that's fixable, and they sent it back to you for the fix. A denial, a claim denial, is a hard failure. The claim made it to the payer, they processed it, and they specifically decided not to pay it because of a discrepancy between your claim and the patient's policy and their internal policies. So today we're focusing on specifically rejections, the soft failure one. Those are the errors that get caught at the gate and don't actually make it to the payer. As our guide says, this is a starting point. So if you were to get into the Hourglass Learning Hub and download the rejection resolution guide, you want to pull that up and download it, keep it in your office as a point of reference. But I will say this as a small asterisk. Policies change, and you'll want to customize this list for your practice's needs and what you've noticed as a pattern. But I want to talk you through some of the steps here to resolving a rejection so that you have at least a starting point down the road. So the first is EDI enrollment. One of the first rejections you might see in your electronic health record is NPI not approved as an electronic submitter. And this essentially means you haven't enrolled for EDI claim submission, or your enrollment is still stuck in the processing pipe. If you see this, don't keep clicking resubmit. Things aren't going to get better that way. You need to determine if you've actually finished the EDI enrollment process with your EHR, the clearinghouse, and the insurance company. EDI is real simple. It stands for Electronic Data Interchange, and it stands for just what it sounds like. It's the ability for you and your practice to be approved to transmit electronic data from your electronic health record in your practice over to the payer through a clearinghouse. There's a process there that involves the payer identifying you, making sure you're in network with them, making sure you have a BAA, making sure you have a BAA with the clearinghouse. There's a process there. And you want to make sure that process is completed before submitting a claim. Essentially, if you haven't started that process, you need to start. When you get a rejection, you need to ask if there's a delay or if the paperwork was missed. This is a infrastructure phase of the board. And without EDI, you're not even allowed in the electronic claim game yet. You also will find a provider directory mismatch. That's a common rejection you'll see. This is a pretty big one. You'll see a rejection report that says something like invalid billing combination, provider not found. Basically, this means the combination of data you sent, either your NPI, your tax ID address, or the taxonomy code, doesn't match what the insurance company has in their provider directory. We need to think about this like a digital footprint. If one swirl is off, the system doesn't recognize you, and you need to check those 4 pillars, PI, tax ID, address, and taxonomy, against your original credentialing. If you want to bill from a new address or with a new tax ID, you can't just change it in your EHR. You have to update your credentialing with the insurance company first. If everything looks correct on your end, you have to call them and ask what they have on file. The other situation that we've seen occur even this year in 2026 is a technology issue between the company that gathers provider credentialing and the payer. I'll give you a good example. In Ohio, there's a company that manages the provider network management, and that company translates provider network information to Medicaid providers, payers, right? The insurance companies that conduct the managed care portion for Medicaid broadly in Ohio. And in early 2026, there was a technology glitch between the provider network management company and the MCOs, or the managed care organizations that are supposed to delegate payment for those services. This caused thousands of claims to go denied or rejected for this particular issue. Now, those providers didn't actually have a credentialing issue. They didn't actually have an EDI enrollment issue. They had a systemic issue within the healthcare system itself. And so it's those kinds of things that give you indicators or flags around where is the problem, where do we need to look, and how do we solve it. It's a good example for the value that a biller adds to your practice, and those claims are going to need to be hit multiple times and followed up on to make sure that payment is actually remitted. Regardless, the rejection still stands. You just have to find out why. This episode is brought to you by Jane, a practice management software and EMR built to support you in the day-to-day work of running your practice. If you're a health or wellness practitioner, you already know the care you provide starts well before your client arrives and extends far beyond the treatment room. Jane is there to support you in every part of that experience. With online booking, your clients can book at a time that works for them. And with features like notifications, they'll even be able to grab last-minute openings when they pop up. It's an easy way to keep your schedule full while getting your clients the care they need. During your appointment, Jane's AI-powered documentation feature can help you thoughtfully take notes so you can stay present with the person in front of you. And after appointments, you can end your time together on a healing note, not a transactional one, by charging the card on file. To learn more about how Jane can support you and your clients, head to jane.app/demo. And one last thing, if you're ready to get started with Jane, you can use my code in the show notes for a 1-month grace period on your new account. Okay, let's talk about clinical logic versus billing reality for a minute. And this is where the paradox that I mentioned earlier really comes after you, right? We try to use common sense, but a clearinghouse uses binary logic, right? There could be a modifier mismatch, so you could see this a lot of the time. So a modifier is inconsistent with a place of service. This happens when your modifier tells one story and your place of service code tells another. A classic example is using a telehealth modifier like 9.5, but then using place of service code 11. Now, as an asterisk here, some payers require that. And so you need to know what the requirements are of every insurance company that you're in network with, what those are, so that you can bill the right way. And it's not always the same. So make sure you know those rules. To a computer, to the algorithms processing your claims, sometimes those mismatch between modifier and place of service code, it looks like you are in two places at once. And because we're not omnipresent, we need to make sure that we're looking at the modifiers and the place of service codes and asking, do these make sense together? If a modifier was required for that place of service code, but you left it off, the claim might bounce back. And so make sure you know the payer requirements and there's some element of logic there. The next rejection that I want to talk about is the patient not eligible or member not valid at this date of service. This is incredibly common. We see this all the time. Essentially, this means that the insurance company found the patient in their system, but they weren't active on the day that you saw them and submitted the claim for. This is where your intake process either saves your practice or sinks you. Really, you have to review the insurance card for an active or expiration date. If the session happened outside of that range, that claim is a dead end, and you need to collect new insurance information from the patient that covers that specific date and send a fresh claim to the correct company. Member not found is similar but different to invalid billing combination, member not found. This is a confusing one because it often gets muddled with the last rejection reason we talked about. But this basically means the patient info you sent doesn't match any record. It usually is a typo in the name. So it's usually a date of birth, ID, or a group number issue. So you just need to double check the card and make sure that you get the ID right, the date of birth right, the name on the card right, the address right. And if your data is correct, you probably just need a brand new updated card from the patient themselves. All right, next we'll talk about the sister company trap and authorization. So sometimes a claim reaches a payer, but it's the wrong payer, even if the name on the building is the same. So let's talk about that a little bit more. Wrong payer rejection. You'll see this when a parent company has different branches. For example, sending a claim to Optum Medicaid when the patient has an Optum commercial plan, or the sister company trap like Cigna and Allegiance. The payer found the provider and the patient, but realized you sent it to the wrong branch. So you have to review the card and find the correct payer ID and resubmit. If it's unclear, you'll have to call the number on the back of the card. You don't want to guess on this. 30 minutes spent on the phone with a rep to make sure you have the payer ID correct is worth the time to make sure that payment is not delayed to your bank account by 30 or more days. Here's a really painful rejection reason and how to fix it. Payment denied or reduced for the absence of pre-certification or authorization. Earlier in this season, we interviewed Dr. Jeremy Fries at Humata Health and what they're doing to fix the prior authorization issue. And if this is a rejection you're getting a lot, I highly recommend reaching out to Dr. Fries about their system and how it solves this. But basically, this means that a prior auth was needed and you didn't have one. You need to stop what you're doing and call the insurer. And if you can't get a retro authorization or the claim was rejected with an active authorization, that's something to fight and to appeal for the sake of the patient. The next rejection that we'll talk about, and the last one, there are many, but these are the main ones that we see, is diagnosis code not valid. This means the code you used isn't recognized as billable by that payer. This is a common misconception. There are thousands of codes, thousands of diagnosis codes, and thousands of procedure codes. They don't all mean that you can get paid for them. Just because they exist doesn't mean that they're reimbursable or billable. So claim can get rejected if the diagnosis code is a Z code or some other code that is not billable. So, or maybe the clinician got the diagnosis code incorrect. They need to update the claim and resubmit it. Rejections are normal. They are the clearinghouse's way of saying, hey, fix this before the insurance company has a chance to say no. If you approach rejections with calm curiosity instead of panic, you'll find that most are typos or simple administrative updates. The success of your practice is really built on a high first pass rate. And by using the rejection resolution guide in the Hourglass, you're building a library of solutions that will keep your cash flow moving and your insurance aging report clean. Next time, we're taking these concepts into the real world, and we'll be sitting down with Shannon Heiser for a full practice audit episode. And we're going to look at the numbers and the workflows. And she's been so gracious enough to let us interview her on the podcast to hear about how she's been successful and where there's still work to be done. You can find all the resources that we talked about on our website, which is linked in the show notes. Until next time, keep your data account clean and your bank account full. I'm Jeremy Zug, and this has been The Claim Game. Thanks, everybody. See you next time. If you enjoyed today's episode of The Claim Game, please take a moment to leave us a rating and review wherever you listen to your podcasts. It really helps new listeners to find us. Make sure you never miss an episode by subscribing to The Claim Game on your favorite podcast app. Your feedback means so much to us. We want to provide valuable education about revenue cycle management. So if there's something we didn't cover in our topic that was a burning question for you, please let us know so we can try to get you the information you desire. You can find the links to all resources we mentioned in this episode in the show notes. And if you want to dive deeper into our resources, we have two places you can do that. First, you can go to our blog at practicesol.com/blog, where we have 8 years of educational blogs. If you want to learn more about what Practice Solutions does, reach out. We'd love to hear from you. Just go to practicesol.com to learn more and to connect with one of our awesome people on our team. Thanks for listening. We are Jeremy and Catherine Zug, and this is The Claim Game. See you at the game table next time.